Hello traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to explore a powerful trading strategy that combines two highly effective indicators, the SuperTrend indicator and the Stochastic Oscillator. So by integrating these tools, you can enhance your ability to identify high probability trades and improve your overall trading performance. Whether you're a seasoned trader or just a trader starting out, this strategy offers valuable insights that can help you navigate the markets more confidently. So stay tuned until the end as we break down exactly how to use this SuperTrend stochastic strategy to boost your trading success. So without wasting any much of your time, let's get started. First of all, what is the SuperTrend stochastic strategy? So this is a trading method that combines two popular indicators, the SuperTrend indicator, which is this one right here, this indicator right here, and the Stochastic Oscillator. I know most of us are familiar with the Stochastic Oscillator. Each of these indicators provides important information about market conditions, and when used together, they can help you identify clear trading opportunities. First, let's talk about the SuperTrend indicator. This indicator helps you determine the direction of the current market trend. It uses price volatility measured by the average true range to plot a line on your chart that acts as dynamic support and resistance levels. As you can see on the chart, this is the SuperTrend indicator. So when the price is trading above this line, the SuperTrend indicator signals an upward bullish trend by turning green, as you can see. Conversely, when the price moves below the line, it indicates a downward bearish trend by turning red, and that is indicated here. You can see here, you can see here. This is for the bullish trend. You can see how the SuperTrend indicator turns green and price goes above the SuperTrend line. And also for bearish conditions, you can see it happening here also. See price being below the SuperTrend line, and the SuperTrend line is red in color. Next, we have the Stochastic Oscillator, and this indicator measures momentum in the market by comparing the current closing price to recent highs and lows over a set period, typically 14 periods. So let me add this. Let me quickly add the stochastic. Okay, this is the Stochastic Oscillator. Now the Stochastic Oscillator moves between values of 0 and 100, helping you identify when a currency pair is potentially overbought or oversold. Generally, readings above 80 suggest that prices may be overbought, potentially due for a pullback, while readings below 20 indicates oversold conditions. So the Stochastic Oscillator consists of two lines, the %K and the %D. When these two lines cross each other in overbought or oversold zones, it can signal potential reversals or shifts in momentum. Mark the keyword crossing each other in overbought or oversold zones. They have to cross themselves. The lines, the %K and the %D, has to have this crossover in overbought and oversold zones, and not within this area, not within between 80 and 20. So that is one thing to note. So in simpler terms, this strategy ensures that you're trading with the trend while also timing your entries more accurately using momentum signals provided by the Stochastic Oscillator. So enough of the English. I'm sure we all understand how these indicators work. Let's talk about the SuperTrend stochastic strategy. How can you use these two indicators to trade following this strategy which I'm about to show you? So the first step is to identify the trend direction. If you want to trade with the SuperTrend stochastic strategy, the first step is identifying the trend direction. So the SuperTrend is going to help us to do that. As you can see, the SuperTrend line is green in color, and I'm using this as our example. This price action right here. Right, the SuperTrend line is green in color and price is above it, and this shows that we are in a bullish market. So the next step is to look at the stochastic oscillator, and you're waiting for the percent K line to cross above the percent D line. The percent K line is the blue line, while the percent D line is the signal line, which is the orange line. And this should happen in the oversold area below 20. So this crossover signals that momentum is shifting in favor of buyers. And if you look at this, if you zoom in, you see the cross here. We have a cross right there at the bottom here, and also at oversold levels, which is telling us that this dip, remember we had a pullback here, had this push to the upside, then this pullback. So here the oscillator was just telling us that this dip is at oversold levels, and we should be looking to buy to push it upwards. So the momentum indicator was able to tell us when buyers were stepping in, showing us this crossover, and the SuperTrend indicator line just happened to appear few trading candles after that cross. So we just look to take a buy entry. Take a buy entry after the break of this after this market structure shift, or we could just take a buy entry to fill in this gap. Remember, after spotting your strategy, after spotting the oscillator, after the oscillator gives us our signal, and also the SuperTrend gives us our signal, we should look for candlestick patterns or confluences, extra price action confluences, which we can use to take our trades. We have a bullish engulfing here, which we can also use to take our trades. So there are so many ways we can use to enter this buy trade, which is about to happen here. So we can enter our buys with our stop loss just below this low, and I'll take profits all the way to significant resistance levels like this one. Or we could just set our take profit at fixed risk reward ratio of 1:2 or 1:3, depending on your preferences. So that is it for this bullish example. I'm sure you understand. Let's quickly look at a bearish example. Let's look for a bearish example. So as you can see, we have so many SuperTrend. The SuperTrend just keeps on giving us so many signals, but we can't enter all of them because our confluences, our criteria all have to occur and align before we take any trades. You can see the SuperTrend turning bearish here, but at the same time we are expecting to have this crossover here. So usually the crossover happens first before our SuperTrend can follow suit, because the stochastic is a leading indicator, so it tells ahead of time before our price starts to replicate what it's telling. Now you can see after this crossover we had price ranging a bit, then price started to fall, and we have our SuperTrend line turning red and price being below the SuperTrend line. So we just look to place a short sell position, but before that you need to confirm with price action. You can see this market structure shift right here. You can also see this long red candle showing continued selling momentum in the market. So we can just be looking to take our sell trades after this market structure shift. We just place at the next candle, stop loss above the high, and our take profits levels at fixed risk reward ratio of 1:2, or we could just decide to target significant support levels like this one. And that is how I would have been able to take this trade using the SuperTrend Stochastic Strategy. It's pretty straightforward. The first step is to identify the trend direction. The next step is to confirm momentum using the stochastic oscillator, and the next step is to confirm with your price action, perform your market structure, and after that you just place your entry order once you see all the criteria aligned. Remember to set your stop loss and your take profit levels as I've aligned in the video. So alright traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.